No, I think, it is slightly better than what was expected, and in this environment, it is quite good, no doubt about it. On the PAT side, I think there is a small miss, but we have to, do the dissection in more detail, and then only it can be said. But overall, given the current environment, these numbers are quite decent. That is what my view is.
The other aspect I want to ask you about is, once Accenture reported numbers, the expectation was that the commentary will somewhere be slightly weak. But the key monitorable from here on is what do the consumer discretionary trends look like? Which are the segments that could deliver growth? Because BFSI was something that was expected to pick up. Taking the first cut into consideration, do you think TCS is setting the precedence in terms of what could be expected from the other companies as well?
No, it is very hard to say because, we are in a very, very volatile environment, and every company, one or two clients going in and out, all those things will be challenging. In my view, most of the companies will be little, cautious when they comment. I don't think any company will give a very optimistic commentary in the current environment because no one wants to take any chance in the such fast-moving environment.
Okay. And to add to this, if you have to look at, the way the stock has performed, the stock is actually at a 52-week low. That's the only stock on the IT index which is at a 52-week low. Taking the performance into consideration, and if you have to see tomorrow's opening for a TCS, what would you see?
Well, it is very hard to comment on any specific stock, but I think the sector is little out of flavor right now, and particularly if you see the large caps, they are reporting very low growth for quite some time. Last 3-4 years, large caps have not given any return. So in my view, people will take a very long-term call. Yes, they are good defensive, and also there is a support from rupee depreciation side. But otherwise, I think the growth is very low in the sector.
Right, yeah, but adding on to that, we see the restructuring cost, adding up to the profit. Now, if you see that it's standing at 1100 odd crores. So what timeline do you see this cost being troubling TCS going forward? Is it like one-time costs we are facing here, or do you think this is going to keep on coming for another few quarters, but something to watch out for?
No, we need to keep a watch on that. It's very hard to comment. We have to listen to the management call. Then only, you can give more concrete opinion on it.
One more thing to add on, given that Accenture, you see that they saw a deflation in healthcare segment, but on the other hand, TCS saw a great uptick in healthcare, given it's the most leading segment in the overall segment. So what do you think on this? How is the healthcare turning up for the entire IT sector going forward?
No, there is good demand in healthcare as of now, but again, the challenge which the healthcare segment is also facing is there is one, there is uncertainty. Second, there is a lot of disruption and contract values are going down because of AI adoption. So that sooner or later everyone will face. That is what our sense is.
Okay, Sandeep, stay with us. Rahul, I want to talk to you about the strategic investments that TCS has announced. They're talking about a new business entity to build world-class AI infrastructure, that is 1 gigawatt capacity AI data center in India. They've approved the acquisition of List Engage with deep capabilities in Salesforce. And thirdly, they're talking about sustained investments in nurturing AI-first culture talent. They're talking of an AI hackathon as well. What would this actually mean when you're talking about a strategic investment like this for a company like TCS?
Yeah, again, the details need to be known, but basis what you are right now saying, this could mean a meaningful allocation of capex. And if that is the case, and we know that some of these investment on a ROC basis could be lower than what the company is currently operating at, it would be seen from the lens.
Rahul, thanks so much for that. This is Sanjana. I'd like to just pose my question to Sandeep Agarwal. Sandeep, let's look at the valuation angle now, because we're looking at margins holding and revenue actually improving. Does this result, do you think, make TCS look more attractive versus peers like an Infosys or an HCL Tech in the near term?
No, see, we are not very positive on the large cap IT names, primarily because the growths are mid-single digit to low single digit, and multiples, while the stocks may not have moved up much in recent past, but still if you see on the PEG ratio basis, they are between 3 to 4x, and we are not comfortable giving 3-4 times PEG ratio for some industry which is growing at mid-single digit or lower than that.
Okay, so Sandeep, are you saying you would advise investors to buy your mid-cap and small-cap IT names versus your large-cap IT majors?
We are not even positive on mid-caps because they are also trading at very high PEG ratio. So we are preferring more platform companies rather than IT services companies.
So platform companies is what Sandeep is going with.